A Florida man, Theodore Farnsworth, pleaded guilty in the Southern District of Florida to charges of securities fraud and conspiracy to commit securities fraud. Farnsworth, 62, engaged in fraudulent schemes to deceive investors in two publicly traded companies, Helios and Matheson Analytics Inc., HMNY, which owned MoviePass, and Vinco Ventures Inc., Vinco. Between August 2017 and March 2019, while serving as HMNY's chairman and CEO, Farnsworth and his co-conspirators made false claims about the company's business and operations to artificially boost stock prices and attract new investors. They used similar tactics between November 2020 and September 2024 to defraud investors in Vinco, where Farnsworth briefly held the CEO position. Farnsworth falsely promoted MoviePass's subscription model, particularly its $9.95 unlimited movie plan, as sustainable and profitable when, in reality, it was a short-term marketing strategy designed to inflate HMNY's stock price. He also misrepresented the company's use of artificial intelligence and big data to monetize subscriber information, knowing that HMNY lacked such technology. Furthermore, he exaggerated the impact of alternative revenue streams to mislead investors about MoviePass's profitability. To manage financial losses, Farnsworth and his co-conspirators secretly restricted high-usage subscribers from fully using their unlimited service by instructing employees to implement throttling tactics, limiting access to movie tickets. In addition to manipulating HMNY and MoviePass investors, Farnsworth conspired to inflate Vinco's stock price while misleading investors about the company's business operations. He and his associates diverted funds for personal gain and took steps to conceal their actions from regulators, law enforcement, and investors. Farnsworth pleaded guilty to securities fraud and conspiracy to commit securities fraud. He faces up to 20 years in prison for securities fraud and up to 5 years for conspiracy, with sentencing to be determined by a federal district court judge. Types of fraud in the case: 1. Securities fraud, falsely inflating stock prices through misleading claims and deceptive business practices. 2. Investor fraud, providing false information to investors to attract capital under fraudulent pretenses. 3. AI washing, misrepresenting the use of artificial intelligence and data analytics to boost investor confidence. 4. Financial misrepresentation, exaggerating revenue streams and sustainability of a business model. 5. Market manipulation, artificially inflating stock prices through deceptive practices. 6. Concealment of business failures, hiding operational losses and financial struggles from investors. How to detect securities fraud. 1. Verify company claims. Investors should research and verify corporate claims regarding financial health, profitability, and technological capabilities. Check independent reports and financial statements rather than relying solely on executive statements. 2. Look for unrealistic promises. Be skeptical of companies that promise unsustainable business models, like an unlimited service that seems too good to be true. 3. Monitor stock performance and insider behavior. Sudden stock price spikes without clear business developments may indicate manipulation. Watch for executives selling off large amounts of stock, which could suggest a lack of confidence in the company's future. Examine revenue streams. If a company relies on one main source of revenue but claims multiple income streams, investigate further to confirm legitimacy. 5. Watch for AI washing. Be cautious of companies claiming to use advanced technologies like artificial intelligence without evidence of real implementation. 6. Check regulatory filings and lawsuits. Review SEC filings and ongoing lawsuits for signs of financial misrepresentation or fraud allegations. By staying informed and conducting thorough due diligence, investors can reduce the risk of falling victim to fraudulent schemes like those executed by Farnsworth.